Hello traders, I just wanted to provide a quick update here on a trade I entered last week in SQ. So I opened this position only 4 days ago, so last Thursday, that's only 2 trading days. And this is a LEAP, it's a long call that is 2+ years out. And I was into this position, I'd spent a total of about, $2,600 on it. It's up $400 already. Now, a couple things that I want to take a look at here. I could already start to maybe sell shorter term calls against this, essentially what's called a poor man's covered call. But I'm not going to, and here's why. I'm going to give you the pros and cons, or the reasons that I might consider this and the reasons I wouldn't consider this. So reasons I might consider this is a chart on SQ, and as we can see, it has rallied significantly, but it is right at what has been prior resistance. Now, that said, if I expand this out a little bit, we can see that I really like the look that volume is up considerably. The up volume is really good in this. That's showing pretty significant strength, which is one of the reasons I chose this to begin with, is that it had a strong move up and then it pulled back here for a day or two. And so that's one of the things. And then if it were to break out, I mean, I think it's got pretty good potential to get up here into the 150, 160 range, somewhere in there over the next few months, year, whatever the case might be. So the reason to sell that covered call is we are at a resistance area, so it might back off there. The reason I'm personally not going to do it is because it is showing pretty significant strength here. And before I made this decision to not do that covered call, I came in here on option strat and I looked at the live flow. I wanted to get an idea of what's happening here. I can see from the flow here that this is very bullish. This is kind of the behind the scenes look at what is happening. And there's lots of big money that's starting to move into this thing. So as a result of that, I am not interested in selling that covered call because I think that covered call could very easily get run through here in short order. Now, if this stock does in fact break out, if it does get above maybe this 95, which is a clean break on this, and this thing starts to run from there, I will, once we get up here into the 130 to 140 range, I will consider selling a covered call against it at that point. I'm just not quite prepared to do it yet here because my whole premise was that this historical resistance, I feel, is due to break. This has been building up pressure for quite some time, chopping in a sideways channel. It's kind of like a coiled spring that if it does break, I do think it can start to run. And the things I'm seeing here, the volume that has picked up in buying the stock, is a positive sign. And again, looking at this behind the scenes option flow being so bullish to me is also a favorable sign. So, and if it does break out above that 95, in my personal count, I may even add to that position with the expectation that it might continue that run. So anyhow, just wanted to give a little heads up there since this has moved so nicely over a period of a couple days. Those of you that want to be shorter term traders, you're up, what, 15, 18%, something like that in 3 days. Not a bad time to pull the plug if you are in for a short-term trade. But my plan all along was longer term, so I'm going to stick with that.